What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is January 30th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, we've got a wide variety of topics to discuss. We're going to be talking about some key resistance levels to watch for Bitcoin, how you can actually get set up with the SMS indicator before we publish it on TradingView, and outside of that as well, talk about a wide variety of factors with traditional equities, painting a picture that we might be entering in for at least a short-term correction, all right? So we've got a lot of things to discuss. Real quick, though, to let you all know, this video is sponsored by eToro. Now, for those of you who may not know, eToro is a social trading platform that allows you to not only communicate with other traders in a variety of different markets, but they recently launched their new feature, which is copy trading, and this allows you to actually copy alongside a variety of other traders, including myself. So you can see actual performance on an annual basis. You can see what they're holding at the time, and also you can see the chart of their performance as time progresses. And with a simple click of the blue copy trader button, you'll trade alongside them real time at the exact same price. So if you're interested, check out the link down below in the description. Now, taking a look here across the board on the market, we can see cryptocurrency markets, at least in the major players here, are definitely taking a little bit more to the upside. But again, I would say that we're in a general no trend scenario. There's some great cryptocurrencies here that are hitting double-digit territory, but the vast majority of cryptocurrencies are between 1 to 2% to the upside or downside. So nothing too severe here. But I will say, we're starting to see a lot of protocols come up here. A lot of the Oracle plays like Chainlink and iExec RLC doing really nice percentage gains here. You also have Engine Coin, another one of our top plays for the year, and also Icon as well, which I know some of you have been a big fan of. There's also plays like Zcash and Bytecoin, some of the older projects, as well as Zcoin. So we're seeing a big bolster here in a lot of the privacy coins over the last few days. You can see the 7-day graph here is kind of telling that story here between these two. So now we've taken a look through that, guys. I want to go ahead and just dive right into it on the topics we mentioned at the beginning. The key resistance levels for Bitcoin. I'm not going to draw them as I go along. I want to have them here and just kind of get to the point here. There's really two levels that I'm watching for, and I think that's why we actually had a little bit of a cool down yesterday in Bitcoin's price after really what was a nice, strong 3-day rally, making up for about a week and a half of pullback. So we really had a nice resurgence here in price, and now we're hitting a resistance range that was practically expected. Now, the reason I say this is because we can take a look back at the last few months of price history, and we can see that there's a lot of relevancy here, right? We're talking about $9,500, big even number. These kind of $500 and $1,000, 500,000. Oh my God, I'm messing up on my words already. $500 intervals and $1,000 intervals are going to play a very big role in resistance and support for Bitcoin's price, especially when we're below 5-digit territory. And afterwards, then we're going to start really looking for those big evens like 11,000, 12,000, 13,000. So hopefully that's clear in that sense. But because we're still in 4-digit territory here, below 10,000, in this case, these are going to be very significant levels. So we can see here, for example, we had a small period back here of resistance before we continued on the rally. We also made support here 3 times and then had a breakthrough here. So when we broke that support, it was severe and the price action went downward. And we can also see here as well that it had resistance here for a multi-day period, right? So we're going to test this area here. And I'm not saying, in this case that we're going to hold that here, extensively for a long period of time or have any kind of severe correction. I'm just saying that it's going to be a matter of whether or not we can get above here, that we'll test whether or not we can get up here towards our next target range of 11,000. This is when we start testing the next big $1,000 level, right? I mean, outside of 10,000 in this case, but I think again we'll be able to move up into this level if we can get above 9,500. The reason this is significant, again, at 10,000, surprisingly enough, 10,000 was not a very significant level back here. You could probably say back here it made support, but there's no time period where it was really significant support or resistance here. It was very wonky price action. So I think that these are really the two key levels to watch. Now, if you're going to ask my opinion on this, guys, again, I can't give you guys financial advice, but what do I think is going to happen? I think if anything, you get a correction down here to 8,900 and then move back up. That would be probably the more bearish case scenario in the short term. But quite frankly, right, just taking the levels away here and taking it to the BLX indicator, putting on the weekly, I think we're charging through here, guys. I think we're doing fine. We're on pace. And not to mention, if we take a look at our indicators, and that segues us into our important steps on how to actually use the SMS indicator, we'll see that our indicator is flashing good right now. It's showcasing momentum. And in that case, if we had a nice base bottom here, we had a nice correction, we've got the indicators flashing, and we've got a long-term time frame where we're expecting this to go up to much more exponential levels here over the next few months, in the next few years or so, then in that case, I'm bullish, right? I'm not focusing on these short-term moves, really. Now, how do we go about adding the SMS indicator? Well, I want to go ahead and just let you guys know you can find the link to this. I'll go ahead and just add both of them. We have a Telegram channel and a direct link to a Google Doc that will allow you to get access to the script for this. And I'll show you guys how to input. It's very simple. You don't need to know how to program or anything. We already had Sandeep who did that and everything. He put a lot of effort into this. But down below in the comments, we'll have a pinned comment that'll have a link to the Telegram and a link to the Google Doc. The Telegram is for discussion if you guys want to provide feedback or modify the script and maybe showcase your work, in that case, with other people. There's about 80 people already in there, and I recommend you guys join in just for the discussion. It's a cool group of guys. But if you want to just go ahead and go to the script, I'll go ahead and show you. You can see there's other people checking it out here. What you have to do is very simple. Just make sure you line up your basically your crosshair here and basically copy from these two lines at version 4 all the way down. Just use your scroll wheel and come down to the end of this. Click Control Copy, and then you come over here and you click what's known as the Pine Editor. It's the third little tab down here on the bottom left of your Trading View screen. And make sure this is cleared. It might have something here. Just erase it and basically hit Control V. You should have about 127, or it might start prompting you for the 128th line. You should have 127 lines here. Just simply click Add to Chart, and voila, you've got the SMS indicator before we've published it on TradingView. Now, you will not have to do this when we finally get it published. We just haven't gone about doing that. We want to perfect it a little bit more. You guys are welcome to use this. This is the most up-to-date version, and we'll continue to update the SMS script as Sandeep and I work on it. But again, I want to say, guys, again, as much as this indicator was originating off of the kind of base concept I had of using the 3 indicators, the squeeze momentum indicator, the stochastic R sign, the MACD, hence the name SMS, I want to say Sandeep has done a great job. He has absolutely led the way in building this. I have no knowledge on how to use Pine script. I was actually going to learn it when I was studying data science before I actually created the channel. But Sandeep has absolutely killed it. He's done a great job in the sense of building this indicator, and big props to him. So if you guys are thankful for the indicator, thank him. Definitely join the Telegram chat. Let him know your thoughts on what you think about the indicator. Provide feedback where you can. He's open to the discussion. I think all of us are people for the people who are in the group. We're eager to see how we can make this indicator, this kind of suite of indicators, better than it already is, and hopefully service not only for Bitcoin markets, but also for gold, silver, commodities, equities. We want this to be an indicator that works well across a majority of markets on these kind of longer-term time frames where we've seen the most success. All right, so now that we've talked about that, again, feel free to use that, guys. One thing I wanted to share as well, another piece of data here, I think is a really cool tool. There's the ScalpX Index. Now, this is a really cool tool that has a variety of different indicators that lay out over the chart here. It uses, of course, TradingView's API. Has a lot to do, though, with the kind of margin platforms. They have, for example, liquidation index. They have open valued, open interest. For the vast majority of you guys, just to keep it simple, I would recommend having these 3 checked and switching to night mode. And these 3 would be the social index, the liquidations index, and the fear and greed index. Okay, so the fear and greed index, this is something we've talked about before. It actually pulls from another website, basically taking in a lot of measurements for fear and greed. In this case, you can see back here when we were at the bottom, we were really setting a double bottom here on the fear side, and now we're starting to take into the greed side. But we're still a ways away from where we were back here in June, where people were overtly exuberant. God, I can't wait to start using that term more often, guys. If you can't, drop a like. If you can't wait for me to start saying exuberance again, time and time again, definitely do drop a like and leave a comment. But I think we'll be in bull market territory soon like that, where I will be using it. But the fear and greed index is a good tool just to kind of get a general weight here. People can use it for equities as well. There's a different measurement for the fear and greed index for equities, but a lot of those same measurements are baked in here to the fear and greed index for Bitcoin. Now, the other thing as well is the liquidations. So we can see here, back over in this time phase when we had this really mass sell-off here, sometimes when you have a large execution of liquidations for longs or shorts, this can be a good sign that, you know, some big players have been knocked out, and then eventually after enough liquidations on the short side, then it might be, you know, good in this case to go long, or sorry for possibly, in this case, to take positions, take profits in this case, because if there's a lot of liquidations of shorts, then in this case, prices are going up extensively. And then also liquidations on longs might mean, in this case, the opposite end, right? If a lot of longs are getting liquidated on over margin positions, it might be good to maybe take some excessive risk taking to possibly go long. Again, go against some of the major moves here where people on the broader sense of the market are making big bets, right? You want to do it afterwards, right? Make sure that, that gets passed through the liquidations. And then the social index is generally kind of similar. What is the general market here? If you click this little icon, it'll say market participants expectations. Most are still expecting it to go down for the most part. I'm interested to get a little bit more info on where they get this price feed from. But you can see here, again, there's another interesting thing, which is market flow. And we don't have this on the actual chart here, but market order flow is basically whether more people are selling or buying in this case. So again, very interesting indicators to take a look at. And you can see there's a good amount of an event log here where you can actually see some recent things like changes in Bitmax's like open interest and open value, liquidations. You can see changes in the indicators, major moves in the market, like if there's any kind of big transfers. So again, we keep an eye on this. Very interesting stuff. I think it's a nice free tool. Now that we've talked about the general crypto market, I want to go ahead and talk about equities. So equities across the board here are pretty much in the red, with very few exceptions, except for, well, really the VIX and Greece, which I guess isn't probably trading yet on its futures. But we can see the VIX is spiking up here. U.S. markets such as the Dow 30, NASDAQ, S&P 500, the Russell 2000, all down right now, about half a percentage point, roughly speaking. And we can see global markets are faring even worse. We've got the MSCI Taiwan down 2.5%, the Korean indicator down 2.2%, China 8 shares, and the Hang Seng for Hong Kong, we can see here down 2.2 and 2.3% respectively, the China A50. So you can see, again, Hong Kong down, China markets down, Germany, a lot of other European markets as well, not faring well. So what's going on here? Why are equities pulling back? Well, over the last few days, we actually got a little bit of a resurgence in equities. If we take a look across most of the actual charts, so we can see the NASDAQ, for example, bounced up after the massive gap down it had of nearly 2% across the board. And now pre-market, it's looking like we might be rolling over. If we take a look at the hourly, you can kind of see that formation. We already started to do that towards the close. But after we filled that gap, we didn't get much gains here in the market, setting a lower high so far. And if we open up down, we're going to probably roll back down to where we were beforehand. But this really has to do with one thing, guys. It has to do with the fears around the coronavirus. I mean, there's a lot of macro factors that come into play with determining equity valuations. But I think this is the real domino here that's really set off the sell side action. The markets were overvalued, as we'll talk about in just a moment. But taking a look at the total confirmed cases here, things are not going as doomsday-ish as, again, we kind of talked about a range of expectations, right? I don't try to predict on these things, guys. We basically talked about if we started to see a plateau here, that's going to be kind of like the best case scenario. China has quarantined the situation and things are getting better, and we're not seeing a mass spread across a variety of different countries. And the worst case scenario would be that this would be starting to continue going exponential and parabolic, meaning that every day we're compounding the amount of cases. But the nice thing is that we're not actually getting that. In fact, right now we're getting something more like a straight line here. Again, this is basically where on a daily basis we're adding about 1,000 to 2,000 cases, which is sad. It's not a good thing, and it still shows that there's growth, but this isn't compounding. This isn't kind of pandemic levels of fear here, right? But again, just want to make it very clear here that this is a much more moderate case scenario. And it's probably why markets recovered over the last few days as this data has come out. Now, of course, I know what many of you are probably saying behind your screens right now. I can hear you. I got I have it's a psychic ability because I do read the comments from previous videos. And that is that I know many of you believe the numbers are being fudged. And I have no doubt about that, guys. No doubt whatsoever. China is meticulously, I don't know if that's the right term, it is very well known for basically fudging the numbers, whether that's for good news or bad news. It does it time and time again. Now, considering that we might have a few thousand more cases than what's being reported, in that case, yeah, maybe it does paint a little bit of a worse picture. But here's the little kind of a good way to kind of get an analysis of the real scale of the issue, right? This will be an issue for China. It's already very clear here looking at the map. What I'm concerned about is the cases in the United States, right? So we've got one here that was discovered in Fresno, one here right outside. I guess, well, this is this isn't in Phoenix, but pretty close to Phoenix. And then also a little bit towards the center part of Washington, outside of Seattle, and here in Illinois as well. Now, the key thing here in the United States and in other countries as well is to see if we do see a growth in the cases, because I believe the numbers will be much more honest in a lot of other different countries. And outside of that, again, you just have a less likelihood of the numbers being able to be suppressed the more we see cases outside of China, right? One country like China that does have a pretty stark control over the media and its government, again, is going to probably produce numbers that it wants to produce. Whereas in other countries here where there's much more open data, there's much more open journalism in this case, I think you're going to get a much better feed here on whether or not this is spreading. Not to mention, geographically, the more it's spread is more of a concern. And that 14-day incubation period is what I'm concerned about. So if you start seeing the 5 cases in the U.S. that have been like this for the last, I think, 3 or 4 days, if you start to see that number growing, that's the concern. Because the concern is not these people who have been quarantined and taken care of, right? The concern here is that there are other people traveling that are not going to be detected and for days on end don't know that they have the virus and are going around, spreading it in this case without even knowing that they have it until they start getting the symptoms after the incubation period. So that's what's really, important here. Now, along with that as well, I don't think that the coronavirus is exactly, I think it's basically was the catalyst to start this correction, but markets have been overvalued for a long time, guys. We've talked about it. Stock buybacks are rampant here. Corporate earnings are starting to stagnate. And we can see here that we have what's known as a record enterprise value. This is a little bit different than market cap we'll talk about, to sales ratio for the stock market. So this is taking the S&P 500 during the tech bubble, as well as over here for the current market. And the interesting thing is this is not just measuring tech stocks. I would usually criticize this if it was, for example, we took a look at the price to sales ratio for the S&P 500 compared to the dot-com bubble and how we're at record levels. But again, that's maybe not the most fair assessment because the dot-com bubble was heavily tech stocks. In this case, we're taking a look at a measure across the board for the market in different industries. And we can see here in consumer discretionary, consumer staples, utilities, healthcare, information technology, across the board here for energy, real estate, we are at record highs for this measurement, this ratio, where basically the vast majority of industries here, the 90th percentile here of sectors, are having a higher level in their record enterprise value to their actual sales ratio. This is not normal. We usually see for the vast majority of history that no companies have a higher level in their enterprise value to their sales. And even compared to the dot-com bubble, we're way beyond that. So what gives? I mean, what really is this? Well, let's go ahead and first understand the enterprise value. So the enterprise value is determined by basically taking in 4 additional values and subtracting a specific value. So taking in market capitalization, adding debt that's on the books, minority shares, and also preferred equity. So this is, again, adding in that additional valuation for the company, and then minusing it by cash and cash equivalents. So general kind of basic accounting in this case, coming into a value here for enterprise value. And we can see in this case that it is not painting a pretty picture for the current value of equities. I think, honestly, one thing that I've stressed here, guys, is that, yes, there is a property bubble in a lot of specific cities, such as Boston, such as New York City, such as LA, San Francisco, and then also a lot of other cities across the world, such as London, and again, and also in Sydney as well, the property market absorbent Sydney, and then also in Melbourne, a lot of other key property real estate regions in those countries, right? All the different areas across the world. The key thing, though, is that we are in an equity bubble. We are in an equivalent to the NASDAQ. And it's not only showing in the tech sector, but in the broader markets, right? Now, I would say that the tech sector isn't in as bad of a position as the dot-com bubble, but I'm talking about, again, the broader equity market. This has definitely been a bubble across the board because stock buybacks are not just prevalent in tech stocks. They're prevalent across the board. And this is a really big issue. I think we're going to come to a point here where companies, either through borrowed capital, take on a lot of debt that they will not be able to pay back in order to prop up their stock, or they're using all the available cash that they should be using for R&D, they should be using to employ new people to scale out their business. And instead of doing that, and eventually we'll see a decline in corporate earnings, they're putting it into stock buybacks, which is going to be basically shooting themselves in the leg. Well, it's not going to be for the people who use this as a parachute to sell their equity in the company and get out before it's too late. But for the people who are staying with the company and have long-term intentions of working at these companies, they're going to make their companies cash dry. And when a recession hits, they're not going to be prepared. And they're going to be exorbitantly overexposed in their overvalued equities. So again, I think that this is a really nasty scenario, but I can tell you guys, I think more than anything, it's very simple. It's an out to get out of the market. You have the highest level of insider selling, basically people who work in these companies who own equity in the company, selling their shares at a peak level of stock buybacks. And talk about a sleazy scheme there, just to put it simple. Anyways, long story short, equity markets, guys, look like they're at least due. I'm not even going to scream for a recession here. We might still climb higher, but I think in the short term, we're going to get a nice 10% correction. We haven't had one of those in a long period of time. I think we need a nice 10% correction across the board before bulls can really get eager. And I think with that gap down, that really set the precedent here with the fear of the coronavirus, as well as, again, the broader equity market just being simply overvalued here. And a concern that a lack of corporate earnings are going to be able to carry equities further through stock buybacks. All right. So I've rambled on enough today, guys. Thank you all so much for watching. If you liked the video, drop a like. And then also, if you have anything to say on these things, guys, please leave a comment down below. And make sure, if you're interested, to check out the SMS Telegram group, as well as the Google Doc if you're just looking for the indicator. All right? Anyways, I hope you guys are having a great day wherever you are. And until the next one, I'll see you all in the next video. Stay tuned.